get ready. In this episode, I'm going to show you how just the little bit of difference will end up doubling, but you can triple or quadruple the amount of money you achieve tax-free in a property structured max funded IUL by just having annual reviews with an IUL agent that understands what they're doing. The difference between structuring it correctly and then funding it properly, but meeting for annual reviews. This is the secret to IUL. So get ready. I'm going to keep it simple. So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist now for north of 5 decades, helping thousands of Americans optimize assets, minimize taxes, and empower their authentic wealth. I'm shocked how many times I see IUL policy structured by agents, and they simply don't know what they don't know. And I look at the IUL policy, and sometimes they were trying to accommodate a lump sum in the first year. And so they solved by avoiding a MEC, a modified endowment contract. And the cost of insurance ends up being so much that 20 years into the policy, the cash value doesn't even equal the amount of premiums they put in there. That's a pathetic rate of return, okay? Internal rate of return is nothing. They don't even have what they put in there. Your cash value in a maximum funded IUL should grow to exceed the death benefit. Not only the premiums, okay, but the premiums that you put in there, it should grow so the cash value grows to equal and exceed the death benefit within 10 or 15 years. That's what happens with our clients. They put in $500,000, the death benefit is $1 million. That $500,000 grows to $1 million within 10 years easily, and now there is no cost of insurance. Okay, they have self-insured, and now their money is all tax-free. It's like buy term invest the difference on steroids. Okay, now I'm going to simplify this. When you set it up correctly and you fund it properly, the worst rate of return that any of our clients have earned on IUL was during the Great Recession. In fact, it was from the year 2000 to 2010. Okay. Now, if you had your money in the S&P 500, okay, index mutual fund, by the end of 2010, $1 million starting in the year 2000 would have gone down from 2001 to 2003 down to about 600,000. Okay. And if you hung in there and didn't panic and sell, it took 4 years until 2007 to come back to break even, to where your $1 million went down to 600,000 and came back to $1 million. And then in 2008, what happened? Most Americans lost 40% again. For the second time in a decade, it actually took 4 years until 2012 to come back to break even at $1 million. At the end of 2010, that $1 million was still only worth about $630,000. Okay, now our clients in that period, by simply having IUL structured correctly and funded properly, that was a decade where there were 5 loss years. See, in most decades since the Great Depression, there's only 3 down years on the average to 7 up years. That decade, there were 5 down years. And so that meant that our clients who didn't come in and diversify, they didn't come in for annual reviews, their million doubled to 2 million from 2000 to 2010 because the return was 7.23%. 7.23%. In the worst decade since the Great Depression, okay? They earned 5 of those down years, okay? I'm talking about 2001, 2002, 2003. They didn't make anything, but they didn't lose. I'm talking about 2007, 2008, 0. So the other 5 years, they made money, and only 2 of those years did they cap out. They made 17% and then 16% in 2009, okay? And they ended up with doubling their money. Their average return was 7.23%. So let's use that. But because it was structured correctly and funded properly, this is what happened, okay? Now, if you were earning 7.2%, like the bottom of my screen here, and you started out with $500,000 and you didn't add another dime to that, this is without diversifying and rebalancing. You just went to sleep like you were Rip Van Winkle and woke up 10 years later. and the 500,000 would have doubled to $1 million. Okay. No, if that just keeps happening, then you're going to double that to 2 million by year 20, and by year 30 you have 4 million. So a lot of our clients, if we never see them again because we structured IUL correctly and funded it properly, 500,000 can grow to 4 million over a 30-year period, averaging 7.2% net. That's in net after all costs of insurance and everything, which we do. We're actually earning more like 8.5 to net 7.2. Okay, the cost of insurance only uses about 1 percentage point. Now, to achieve that 7.2% net internal rate of return in a tax-deferred IRA or 401k in a 33% bracket, okay, you would have to be earning 10.5 or 11% to net 7, okay? And so this is way better than an IRA or 401k. To earn 10.5 or 11 or 12% in a mutual fund, you have to take unnecessary risks. So this is my favorite vehicle for that reason, but we do way better than that. Sadly, there's a lot of IUL agents that there is no way, because they didn't structure IUL correctly, that the client is netting cash on cash 7.2%. In fact, they'd be lucky to gross 7.2 and net 1 or 2% because they didn't know what they were doing when they set up the IUL. Okay, that's so sad. That 500,000 in the 20th year is only worth 500,000, is what I'm saying. I see hundreds of IUL policies that if that's what you put in 20 years later, that's all you have in cash value. So if you're an IUL agent, you better look at your illustration. And if the cash value doesn't even equal the premiums you put in 20 years earlier, you need to audit that. You need to correct it, or you're doing your clients a disservice. Okay, that money should have doubled twice. Now, if it doubled 3 times, okay, million to 2 million to 4 million, now we're talking about internal rates of return of 7.2%. What we teach IUL agents to do, and if you were to come to one of our IUL specialists, you would earn more like 11 to 14%. If you earn 11, you'll net 10. But worst case, ever since 1980, even before IUL, just universal life was out, I've been able to average 9.62% net after all costs. Okay, 9.6. Let's just round down to 9.6. You divide 7.2 into the rule of 72, your money doubles every 10 years, okay? But if you earn 9.6, that's only 2.4% higher, okay? 9.6 divided into the rule of 72, your money doubles every 7.5 years. So our clients who come in annually for annual reviews, we diversify every year based on what's going on in the economy and the market and rebalance their portfolio. You can learn how to do this by seizing opportunity. And many times our clients end up earning as much as 61.33% like they did in one single year from March of 2020 to March of 2021. Because when there's anxiety, there's opportunity. But on the average, if all you do is tweak the return to 9.6, which is a no-brainer, this is the result. 500,000, the same 500,000 doubles in 7.5 years to $1 million. But in the 15th year, it's worth $2 million instead of the 20th year, 5 years sooner. It grows to $4 million in 22.5 years, 7.5 years sooner than this one. But in the 30th year, it's doubled to $8 million. How much more is $8 million than $4 million? It's twice as much money. Did they have to earn twice the rate of return? No. They didn't have to go from 7.2 to 14.4. No. They only needed 2.4% higher return, 9.6 instead of 7.2, to end up with twice as much money in 30 years. This is what our clients do. This is what a property trained IUL specialist can do. This is what I want for you. Don't settle to put in 500,000 to end up with 500,000 20 years down the road. And maybe if you're lucky, $1 million 30 years down the road when you could have 4 million. But why settle for 4 million when you could have 8 million? By talking to an IUL specialist that knows what they're doing, okay? So if you're an IUL agent and you want to learn how to do this, this is the secret to IUL, you need to check out IULinsiders.com and learn how to do this for your client, diversify and rebalance. If you're a member of the general public, I would strongly implore you to talk to an IUL specialist that knows how to do this instead of this or worse than that, okay? So this is what I recommend you do. Check out my book, The L.A.S.E.R Fund. This is our most recent best-selling book, book number 12. It's been flying off of our warehouse shelves. And you can buy this book, it's 300 pages, on Amazon for anywhere from $20 up to $60, plus shipping and handling. And if you do that, thank you. But I'll give you a copy for free, but I do require some skin in the game. You contribute a nominal amount towards the shipping and handling, and I'll cover the rest of that cost, and I'll pay for the book. Okay, I will fire out a hard copy to you via priority mail. You go to laserfund.com or click on the link below, and you contribute towards the shipping and handling. I'll pay for the book, fire out a hard copy. When you're in there claiming your free copy, if you like to listen and learn or watch and learn, there's those formats available for your investment. And by the way, this is 2 books in one. If you say, well, I don't understand money. Well, then that's for the left brain side. This book, the white one. And this is the charts and graphs, 14 chapters, all the numbers. But if you're more of a right brain learner, you learn more by stories. You simply read this one. You flip it over and read this one. This is 12 chapters, 100 pages with 62 actual client stories of how it works in real life, okay? That's for the right brain learner. If you want to use your whole brain, your left brain and your right brain, you can read the whole book. But when you're in there claiming your free copy, you can register for one of our educational webinars that we do on a weekly basis. There's no cost or obligation, and you'll learn more. But you can even schedule an appointment to talk to a properly trained IUL specialist that I oversee, so that you will see an illustration of a properly structured IUL that does this instead of this or worse, okay? It's huge. Would you like to have twice as much money? Then talk to an IUL specialist that knows how to diversify and rebalance and is in this business as a professional instead of just selling a commodity, an insurance agent. Insurance agents are a dime a dozen. You producers sell insurance. Professionals help people optimize their assets using IUL. So this is about you and your brighter future, and I'll see you on the other side of your brighter future as you begin to learn and employ these strategies.